All right, what is up, everybody? Give me a hello in the chat if you can hear me. Had a couple glitches when we started the stream, so had to improvise the background there. Yeah, happy Monday. Hope you all had a lovely weekend. All right, you guys can hear. That's great. It's good news, Calcium. Howdy, Tunsky. What's up, Max? What's up, Crypto Dude? Jinsinius, I see you all in the chat there. As always, if you guys have any requests for the stream, feel free to drop them in the chat. We do this a little ad hoc. Looks like I have the wrong screen up here. So let me fix that real quick, and then we'll get rolling. Let's see. Where is my DXY chart? There it is. Oh, there it isn't. I don't know, my Streamlabs isn't playing very nice right now. Maybe I can do this. There we go. Alright. Improvise, adapt, overcome. Still got some music playing in the background here. 1 second. Guys, running a stream is not easy. Not equipped for this. Alright. Non-dark mode. You guys not like the dark mode? Is the dark mode bad for the stream? I don't know. I love the dark mode, personally. I feel like I'm going blind when I look at the white background. But but if this is crappy for you guys, then you know, happy to tweak it. Yeah, let's jump right into things. It is Monday. I don't usually trade on Mondays because like to see the weekly range starting to develop. Usually a nice accumulation day, and then try to catch a move later on in the week, maybe tomorrow. So I've been watching everything all morning. Quick recap of last week. We had some big moves. Oh, light mode was on my Twitter. Oh, yeah, I have dark mode on the phone, Tunsky, but I've just never changed it on desktop. But yeah, I'm a big dark mode guy generally. Yeah, big thing that happened last week, in my opinion, was the move in the dollar. Dollar, as you guys know, is something I have been watching forever. We basically traded this thing fair value gap to fair value gap, monthly fair value gap here, monthly fair value gap up here. Actually broke down a little sooner than I was expecting, but I did get out of my euro short in a nice profit anyway because it was looking a little weird. I thought we were going to maybe get another run up, but yeah, we had a pretty big candle down right here. This was Friday, and that just broke all sorts of structure. Big impulse move there. So dollar is rolling over. That is generally very bullish for risk, especially our coins. So really happy to see that. Are we going to go down permanently? You know, probably not in a straight line. I think there's actually a pretty good case to be made that we bounce here, because you know, if we just do a top-down analysis, we bounce at the fair value gap around 99.5 on the monthly. We hit the fair value gap 107.4 on the monthly here. What do we have that we just traded into? It's another fair value gap on the monthly, so potentially going to bounce off of this area. So I think on a shorter time frame, you know, maybe neutral or temporarily bullish on the dollar at best, but that could just mean a little move back up here to retest some of this area that we broke down from before, continuing lower. So feeling pretty good about that. Big thing happened last week. We had the quarterly refunding announcement from Janet Yellen over at the Treasury. I had a bullish upside surprise in that, very dovish surprise, coinciding with a FOMC meeting where Jerome and the Fed basically confirmed that they're pretty much done hiking for the moment and playing the wait and see game. So we saw long-term Treasury yields really trade down last week. TLT, which is the opposite of that, had a big move up here. Coincided with a fat rally in stocks. I mean, this is an amazing move we had last week. Let me pull up a weekly chart. That's a solid candle right there, boys. Solid candle. So we're up 6.5% last week. Pretty sweet move. Yeah, feeling pretty good right now in the short term. Some possible mid long term bear catalysts. I think that what the Treasury is doing right now is probably like long term inflationary, kind of took their foot off the throat of inflation. I think easing up. They kind of freaked out when the bond market started to panic a little bit. So short-term bullish risk, maybe long-term bearish though, in that it could cause some sticky inflation. Possibly bringing with it renewed hawkishness from the Fed, maybe higher energy prices, the whole 9 yards. But on the bull side, we've got the BTC ETF obviously in crypto, and we've got the 2024 election next year, and I'm pretty skeptical that the powers that be are going to let Donald Trump waltz into the White House with a bad recession. So I think they're going to do everything they can to do some can kicking over the next 12 months, and with rates peaking and a lot of this peak fear subsiding and the dollar rolling over, I think it could be a good time for us in risk assets. But as always, I think we need to proceed with caution, because unlike prior crypto bull runs, there is this potential nasty recession hanging over us, and there are some smart people who I respect who think that's coming in maybe Q1 next year, but people have been predicting recessions for a long time at this point, and those people have been very wrong. So let's get back to stocks real quickly here. I've been telling you guys, I've been swing trading this pretty nicely. I was hoping, as I've mentioned, to maybe get a bottom on the NASDAQ down in somewhere in this zone, maybe running that low in the mid 12s. I would have loved that as an entry. It's worth considering if we have bottom now, though, because there have been some fundamental changes in the market thanks to the QRA that we just talked about. And we did hit this target that I had been posting about for a while. Fair value gap, ran these lows. Is this enough to reverse and go back to all-time highs? Yeah, possibly. I would feel a little better coming out of like a demand zone, some of these down candles versus kind of bouncing off a fair value gap. But if we zoom way out on the NASDAQ, we'll pull up like a 3-month chart here. I mean, there are no structure breaks on the 3-month chart, right? This is just up only. It's just dip and then go higher. You see even that nasty sell-off that we had in 2022. That basically was just us retesting a quarterly fair value gap, and I certainly think that you can just bounce off this and go to new highs. So pretty bullish in my opinion on the 3-month. Obviously, a lot of stuff can happen on a 3-month chart. When you zoom in, you can get some pretty nasty wiggles. But I am aiming higher. I am definitely thinking we can go well into the 20,000s at some point. So, but that being said, I wanted to get an entry a little farther off from the all-time highs here. Like we're still kind of if you map this out as like a range, we're still pretty we're still kind of in a premium, from the all-time high to the recent low. Like I'd like to buy for the long term, in here, the zone I circled, because this isn't a discount. I don't like buying in the premium of a dealing range, kind of right bumping up against the all-time high. It's just generally not a good risk reward. Happy to take swing trades on lower time frames, but kind of awkward right now. As for this current leg, where is this going? I think a lot of people are expecting a reversal from this point, maybe something like that, because we are kind of bumping into this supply zone here. I have like a bit of a different view on what structure is right now, I think, than some people do. Like I saw our market structure is looking like something like this here. This is not a new low to me, because these are just wicks. There's no close below, which means this isn't a protected high. So if you kind of zoom out a little bit, this is what structure looks like to me on a higher time frame, and that means that this high that we have here at 15,487 or so, I don't really view this as a protected high, so I'm not actually expecting price to bounce here, and I think there's a very good chance that what we do this week is ultimately trade up and take this high. I do think it's very probable, though, that we kind of top somewhere in here, below 15,728 or so, and retrace, and then possibly go higher. But it's not a given to me that stocks necessarily don't make new lows from here. I think probably not, but I would feel pretty good about playing a short from here, and pretty good about getting into a long towards the bottom of this leg, somewhere in the 14,400s or so, or wherever that higher low potentially gets put in. Just don't really want to get into a long here. And if I clean this up a little bit, thing that really jumps out at me, two things jump out at me. Daily fair value gap, kind of got a quick tap on it, but I think we trade back into this. This is probably a good short-term target for a long, I think, taking this high into this gap. But we also have an order block here, daily order block, that gave us the recent leg down, and that has not been tested at all yet. So that's kind of going to be a bit of a headwind for price moving forward. But for this week, like I do think that the draw is this high. So I'm going to be sitting around on Tuesday or Wednesday, probably looking to get into a swing long. So going to look for some sort of move down that I can basically fade. You want to see something like this and then this. You could say that this is maybe like a Monday accumulation range. You could get like a manipulation move out of that range. Something that kind of, runs some lows on the 1 hour chart. But if you zoom into like the 4 hour chart, that would just be us, kind of moving into this gap here. So maybe we bounce off that 4 hour gap and then continue higher, target this high, or target the supply above. So if that setup gives on Tuesday or Wednesday, I'm going to take that. Always good to check out your Forex Factory red folder news, so you can kind of get an idea of what's going to happen during the week. You want to be observing the red folder events. These are the types of things that can really move the market, and we got 2 Powell speeches Wednesday and Thursday, unemployment on Thursday, consumer sentiment on Friday. So not like a super dense week. I think we had a bonanza last week of red folder news, so a little different here. But yeah, that's my generalized plan on stocks. My generalized view on the dollar and macro. Constructively bullish, and Bitcoin, as we move into crypto, still kind of doing its thing. I think the Bitcoin chart still looks super bullish. I've said I think we're going to bounce somewhere in this monthly supply, but I feel pretty good about us ultimately taking 48K high, which would set the stage for us ultimately going back to new all-time highs if we're able to do that. But yeah, we're sort of in a bit of period of consolidation here, as you can see on the 4-hour. I don't think this is necessarily bearish either. It's very possible that you get one of these nasty kind of wicks down, run that, and continue higher. I think something like that is probably for buying if we get it. I am pretty bullish because the monthly last month, we had a very nice close on the monthly, very strong close. So very possible you get a monthly candle this month that kind of starts down, but then ultimately finishes higher. But I think that wick is probably for buying. I've been also paying a lot of attention to Ethereum. I know I've mentioned a lot that ETH looks like it run pretty hard, and it has run pretty good in recent days. So we actually saw a nice move up. Pull up the 12-hour. Yeah, there we go. So we've been talking about this this supply here was a big deal for me. And I talked about how it seemed as though we were consolidating underneath it and just kind of going to rip through it. And we did. We had a nice bunch of nice 12-hour closes above that supply. We have all this untapped liquidity here above. I think we kind of go through all of that. And then it gets kind of interesting to me. I'm a little worried about this imbalance here, around 1965 or so is probably the mid-range of that. So I see a couple possibilities for us. Like I'm probably gonna look for a hedge if price trades up into here, because I think there's a very good chance that we reject and then maybe come back up. But this could also be like a lot nastier of a rejection. Like it wouldn't shock me if we like reject really hard and then ultimately go higher. There's kind of a couple of forces working against each other right now. If I go to the weekly, I'm pretty bullish on this structure overall. Like I think things look pretty good. It's a little sloppy on ETH compared to Bitcoin, but you can kind of like really 50 IQ this chart and just be like, okay, there's resistance, and then we're basically doing one of these triangle things, and if you zoom out, it probably just looks like something like that's going to happen. And I'm kind of into this idea. I think that's probably what happens here. And if you just kind of look at the market structure at a higher time frame here, this is what it looks like. We did put in a higher high here, trade here, and I think something like that is sort of the most probable path zoomed out. When you zoomed in on what was happening here, like if you go in on the daily, you get a bit of a different vibe for the market structure, right? It's a little choppier. I think we put in a new high there. So as you move from the higher time frames to the lower time frames, you get a little choppier price movement. Let me change the color of this so you guys can see it. Make it yellow. All right. So sometimes people are trading and they get a little caught up in like the lower time frame market structure, and they're sort of ignoring the higher time frame order flow. Like there's a lot of people who saw this low here get put in, right? And like, oh my God, we broke this low, we broke this low, right? And then this low got put in here, and they're like, oh my God, now we broke this low, so now we got lower low, lower low. This is bearish. This is bearish. In reality, if you sort of zoom out on the structure, like the higher structure that this belongs to, right? Like I was saying that, you know, we could really go all the way back down to, you know, 1233 or so. I guess that's 1170, like 1170 to 1296. That sort of zone there. And I don't think that would necessarily be the end of the world if that were to have happened, because the origin of the move was there, and I sort of view. I like to look at, you know, sort of the original consolidation, if you will, when you look at these moves, and I'm sort of trying to ride these legs up from these points of consolidation, and as I see it, like that was, you know, back here in you know, post merge, we had this little period where we ranged from 1200 to 1388, and then you see this very, very frequently when you have a big move. You have a consolidation, right? And I know we've talked about this a bunch. And then you have a manipulation, right? So price up and then down. So people are like, oh, we're going. This is the breakout. And then it actually runs the lows of the range. So it kind of wrecks people on both sides. But then immediately thereafter, we start getting this impulsive move. And then you can kind of look back and say, okay, this is sort of like an important zone. And then this zone itself can be support moving forward, right? Like if the leg up hasn't really hit the price it's targeting, which I think is you know, somewhere in this zone here. I think at a minimum we're probably coming up towards the bottom of this zone, which is about 2,500. The mid range at 3,000 is a little more probable, but in reality, I think the most probable of all is that we ultimately do take this high at 35.84 and then kind of go to new all-time highs. So given that this leg hasn't really, in my opinion, accomplished its goal, like it hasn't really run, we obviously ran this range high here around 2,000. That caused like a bit of a sell-off. You are going to get these sell-offs when you kind of go to these key levels, but ultimately, like, what is this impulse going towards? I think it's going towards a much higher level, and that level is this monthly supply. And I think I fibbed this out before. Like, you can view this leg as a range, right? We haven't even traded into a premium of the 2022 Q1 sell-off leg, right? But in reality, if you zoom out even more, this entire leg down from the all-time high is also a range, right? So you can see that this monthly zone here, the mid-range of it actually correlates pretty nicely with being in a premium on a really really high time frame. And this is like where I'm more interested in like slowing down and taking some profits and maybe waiting and seeing what happens. But like trading all these wiggles in here to me is kind of it's kind of nonsense at this point, and it's just sort of like a recipe to get wrecked. So, but to finish what I was, oh god, I've made this chart so ugly. I'm so sorry. To finish what I was trying to say on the summer move, where I was sort of screaming bullish, and other people were, thinking that it's all over. What you had was this higher time frame leg that led to the swing that broke structure here, right? So this is a critical zone where you could see like a reversal on the higher time frame. And I often like to take trades on these setups where, let me just clear this so you can kind of see what I'm talking about. So you've got this higher time frame zone here, presumably a demand zone where there's going to be some significant demand. You have this low, and then below it rests a bunch of liquidity. This is where people have stops. Now, although this low on, say, a daily time frame, is a low that quote unquote breaks daily structure or 4-hour structure, whatever lower time frame structure you're looking at, in reality, at a minimum, this is sort of your protected low. But I've actually argued that like you could still be bullish on a higher enough time frame, like all the way down here. So you have a move that freaks people out. You take this critical low, you run a bunch of liquidity here. In reality, all that you're doing on the higher time frame is just simply trading back into a higher time frame demand zone. Like you get rid of all of these wiggles in price, and you just see this leg up, this leg down, and then hopefully this leg up. And if you fib this out, like if I do the down leg here, yeah, like you can see that price like very very nicely just retraced into the mid range of this. We didn't even have a close below the mid range, and then boom, we're gone. Now, is this leg up going to stall before going to new all-time high? It's certainly possible. It's certainly possible. But we've got a few things going for us, right? Like on the weekly chart, we've got some very impulsive moves. We've got a very big fair value gap put in here, and then this here is basically going to be like a weekly breaker, if you will. So this is sort of the origin for this move that ran and closed above this critical supply zone, right? So whenever I have an area on the chart that is really important as far as market structure goes, so again, we talked about this area before. We've broken that and flipped it now, right? So now what I'm curious about, what I'm concerned with, where I'm looking to maybe add to positions or to make shorter term trades is on a move, that goes back to the origin that gave us that critical thing. So in here from 1750 to 1518 or so, this is sort of like critical demand, and if you are so fortunate to get a retrace into here, I think this could be a good jumping off point to go higher if you haven't really filled your spot bags. Yes, Calcium, I did change the candles on this chart to white. I went a long time not realizing that I had light blue candles, but my eyes are open to the way of the world now. So thank you guys for enlightening me like that. A little sip of water. Okay, so yeah, that's just my general like really high time frame view on ETH. I still think this is going to be really hard to just trade on. Like ETH itself is obviously a super volatile asset. It's very easy to get shaken out of your positions. But that's why I was, been telling people since summer, like if you zoom out far enough, you're just probably looking at a gigantic accumulation range. And like I do think this thing is ultimately going into the 5 digits way up here. And someday you might look back when we are way up here and think to yourself, "Wow, I was really dumb, just getting thrown out on some little wiggles here." Now that price is up, 7x, 10x, whatever it's going to be. So yeah, definitely have shifted that mentality. Like I said, I am considering taking some hedges, but they're just hedges, right? They're just spots where I can rely on like really high probability zones to get a reaction. Possibly make like a quick little sum and then close the position. Like again, I identified this zone here as a potential zone. This gap from 1945 to 1988 or so, and then we also talked about this supply, that made up the top of the spring rally. These are potential reversal points, but like once we get through those, I mean, it really is just air for a while, and price could move very, very, very quickly. The only zone that is concerning me after that is this zone here. What is this, like 27 to 3K or so? Because this is this is a pretty critical supply area, right? I guess you could just shrink that down to just like a daily order block. But this gave us the complete capitulation leg down in Q2 of 2022. So definitely expect a reaction from 2,700 or so, but that's a long ways away if we're able to rip through those levels. So feeling pretty good. Let's pull up the ETH BTC chart real quick. This thing has been moving lately, and I have been saying for a while, like if this thing goes, it's going to go, and it's going to go really hard because once again, all untapped, just trend line liquidity, so this can go up very, very violently. However, I am still hedged. I think this high here, 0.05567 or so, is what I have my eyes on. This is the last protected high we have, so it's very possible that price just bounces off of here and actually goes lower into December before continuing higher. I've said a few times I expect a reversal December or January, all things being equal. All things aren't equal right now. We do have a looming ETF, so I think there's a possibility that an early ETF announcement could be like a quick capitulation candle down in this. But I do think that I'm not the only one who believes this, of course, but I am of the opinion that the ETF is probably going to be the local top for the Bitcoin ETH pair, so the bottom on ETH BTC, because I think once we have a Bitcoin ETF, the market is immediately just going to start thinking about an Ethereum spot ETF, and there are people I follow who are more knowledgeable about the mechanics of this than I am, who say that could be a matter of months to get an Ethereum spot ETF, if you could believe that. And obviously a spot ETF could be like very long-term impactful on the price of Bitcoin. It's going to be even more long-term impactful on the price of Ethereum, because there is even less far less institutional exposure to Ethereum than there is to Bitcoin currently, and the market cap of Ethereum is a fraction of Bitcoin's, and so it's going to be like way more impacted by these kinds of flows. And that could be a perfect storm, right? You could see like another death of ETH party, where the ETFs announce we run that low. All the Bitcoiners are like, you morons, Bitcoin is an ETF, ETH doesn't. We told you all to not buy this shitcoin, and then it just goes whoop, and it's game over, flipping in 2024. So definitely something that is on my radar. I don't see the case. I view Bitcoin purely as like a macro asset now. It's like almost not even like a crypto asset to me. So I think it belongs in like an overall portfolio that has a bunch of assets. It's got stocks. It's got I guess maybe not bonds if you're under the age of 90, but commodities, that sort of things. But in like a crypto portfolio, I don't know. Like I don't personally see the benefit of it. I'm not saying to have zero, but like like something like Ethereum to me is it just makes so much more sense than Bitcoin in a crypto portfolio. And I've seen people kind of running numbers on what the they used to be like 80% Bitcoin, 20% ETH, and then I started seeing people say 50-50. But I've been seeing a lot of people throw out 80-20 now, 80% ETH and 20% Bitcoin, and that feels right to me for like a crypto portfolio, and that's probably what I'm gonna target moving forward. But to each their own. Chat, you're funny. What was I saying here? Oh yeah, so my sort of 1 year ish crypto investment plan has been heavily revolving around what Bitcoin or what ETH is doing. Mostly what ETH is doing. Like I did add a lot of Bitcoin over the summer. I used to have none, but I added a bunch because of the ETF stuff. But ultimately, I think everybody is asking like, when altcoins? Do I buy altcoins? And the way I'm thinking about this is that I don't really want to buy a lot of altcoins until Ethereum has had its run, right? Like I kind of feel like Ethereum is the thing that re-injects liquidity into the altcoin traders. I think like until Ethereum moons again, we're still kind of PvPing a bit in the altcoins. And not only that, like if you rotate into like total 3 type alts before Ethereum moons, I think you're running a risk of sort of like selling Ethereum at the bottom now, in a way. Like you don't want to sell all your ETH for Solana, like I was talking about last week, right before ETH does its sort of December, January, February, and then like rips a bunch. And I mean if you pull up the Solana ETH chart, I mean obviously this is still very short term and anything can happen, but we ran straight into that supply zone, and Solana has been struggling versus ETH ever since then, and this is basically just a bullish downtrend on the hourly right now. It's possible we make another run at the highs, but like my gut, and more than my gut, just like my analysis is just telling me that I think the time to rotate from something like Ethereum into Solana, if you don't already own it, is probably like spring of next year after the ETH run. And that's kind of my plan. Very, very heavy, very, very, very overweight ETH. And then if macro looks okay, if everything looks okay, maybe start rotating from ETH into some altcoins. What are you saying there, Tunsky? When ETH all-time high gets broken, how do you think resistance levels will be found? Yeah, it's a good question. When you are in price discovery, where do levels come from? I think that one thing that works pretty well is to use fib extensions. and this is something you guys have seen me do, in the short run, or like say I'll take like an accumulation range and then map out a manipulation leg, and then use projections to kind of see where I see that going. This is something I do all the time in stocks, by the way. It works a little better in stocks, in my opinion, but if you kind of back test this on Bitcoin, you will see very frequently you get moves into this sort of 2.5 range. And if you get a move past the 2.5 range, you often go to the 4. And then I'll, like in this case, I'm seeing this high around the 4 extension, so I think that's plausible. But you can also zoom out, and like people will do things like map out an entire accumulation range and then sort of use that to project where price might run into. There's all sorts of ways to do this. I'm planning on just looking at short-term price action though, and not really relying on this to get out. Like it was pretty easy in retrospect to sell the top just using price data that was created during the bull, right? Obviously you put in a high here, and then you had a bunch of failures to close above the high, and then you have this impulsive move down, right? It's a displacement, aggressive sell-off. Like if you're already expecting reversals around these areas, when you zoom in to lower time frames, there's two schools of thought on these entries, and it kind of depends on the asset, and you can actually see what happened here in two different areas. So we also had a displacement in the initial top, right? Fair value gap. We break structure, and then you got like a really easy. This was a very easy sell or hedge, right? You have a market structure break. You have a retracement into the displacement gap right there, and then you can just sell here. And then if price reclaims the high, right, this is generally invalidated. You can maybe take your hedge off, maybe you go back out. But if you did that, you basically saved yourself like immense amounts of pain. But what happened the next time is we got the displacement, and then you never got a retrace, right? You just immediately got wrecked, and you really actually never able to get out of this unless you got really, really micro, because if you zoom in, we put in a high in October, right? And this was a new all-time high. And then later in November, we swept that high. And then you could see fair value gap. And what happens, price retraces into that gap, right? And then that's basically that's like it. That's complete game over. Like you never get a shot back at it. So yeah, markets generally give you time to get out. I mean, I'm sure you guys saw the Wyckoff distribution thing everybody was putting out. This took forever to play out. I mean, this is basically two and a half months. So when you start to see topping patterns, when you start to see things that look like distribution, you can get a little careful. it's not like you have to be like, oh, 100K is the level, and when we hit 100K, I'm just going to sell. Like, you can look at what price is doing at the time if you understand price action. Like, price isn't just going to go up, hit 94K, and then just go straight down. It doesn't work that way. You know, you make a high, sometimes break down, recover, sometimes run that high, break down. Like, you start getting sketchy looking price action that takes a while to develop. And although you might not want to short this right away, and people do short early and they get liquidated, if you're just long spot from a long way down, you can just sell. You can sell, you can reduce risk, and you know, if the market wants to really go higher again, it'll probably let you know, and you know, you'll be able to get back in if you're feeling so inclined. But I wouldn't be greedy. Like, if you've been accumulating for like a year and you play this like 4-year cycle, you know, and price goes to 120K and you're like, all right, this is great, I made a bunch of money, and you sell, and then it goes to like 140K, it like fakes you out and goes back up. You don't have to freak out and get it all back in. You made 5x or whatever. You know, you keep a little moon bag. You know, just be happy with what you had, and you don't start chasing, because that's when you know, it gets ugly and you lose it. Tunsky, you got 80% of your ETH at 4K. Ugh, that's brutal, man. But you know, live and learn. I don't know if I explained this like super well. So this is like a framework that you can use, right? Like, imagine you have like a high time frame high right here. A very basic framework you can use, and this doesn't like work magically all the time. It's not that simple. Like, sometimes it is actually this simple, but often it's not, right? But the basic framework is you have price that is running up, right? Higher highs, and then you have price. What you often see is price runs this higher time frame high, and then it puts in a lower high, and then it breaks market structure, retraces into the leg that broke structure, and then sell, right? So this is the protected low as far as market structure goes, right? That's the low that gave you this high that ran this critical high here. Again, imagine this is like a critical long-term high. Once this low is breached, you have a shift in market structure, and then often in here you get a displacement leg. Like, you'll get like a fair value gap, right? You'll get something you like this right here is a good example of it. This is kind of textbook what happened in the spring of 2021, right? Oops, sorry about that. I fucked up. Oh, there we go. Yeah, so if you look on the daily here, like, first of all, you can just sort of look at this chart and be like, oh, price action is a little weak here. And we have indicator, like, some people like to use like the RSI, and you'll see like you know, a bearish divergence. But in reality, like, I don't use the RSI a lot, because you can just see this with your eyeballs, right? Like, this leg here makes a new high, and it's super strong, right? Then this leg makes a new high, and look how weak that is compared to the prior leg. And then this leg here is like, and it makes a new high, but like, you're making new highs, but on progressively weaker action, right? And this will probably print, like, if I had an RSI up here, I'm assuming this would print as like a bearish divergence. But like, I don't use that a lot, because like I think you can just see this looking at the price action. But you know, from a market structure standpoint, you can mark this out. There's your higher high, your higher low, higher high, higher low, higher high, higher low, higher high, and then boom, boom, and boom, right? So this here, like if I just take this and is my doodle still here? No, I guess my little sketch is gone. But this is basically what I sketched out for you guys, right? So you have, imagine like a high time frame high right there. You got bullish structure, bullish structure. You take the high, then you have this impulse leg down, breaks market structure, and then in here, you very frequently have a displacement, some sort of gap, and a place to enter. And again, like if we look at what actually happened here in the spring of 2021, this is about as textbook as it gets. Like I sometimes tell you it's hard to like get these entries. This is really easy. You have the run of the high, you have the break of structure right here, you have this displacement in the form of a daily fair value gap. What does price do? It trades into the gap. You go long here, and then boom. Like this is this is like shorting a top 101. You know, stops above here, and like easy, right? But sometimes you do get faked out. Sometimes price actually does come back up, and it, like if you look at some of the Wyckoff distribution schematics, right? You'll see that price often one of the schematics, right, is that you put in your high and you have an up thrust, right, and you actually take out that high after a sign of weakness, but then there's also the up thrust after distribution before you go down. So in one of the Wyckoff schematics, you actually have a high, but you actually run it twice before continuing down. I know there's like a couple of schematics on this. I don't really use Wyckoff a lot, but like I'm just trying to say that like it's not always this clean. But in the case of the last bull, like this was textbook. Like you could have used the absolute basic price action 101 model, and you would have basically almost exactly top ticked it, right? Like if you sell at the start of the gap, where is that, 57,800, and we topped at 65K. That's pretty damn good. That's pretty damn good. But like I said, when like markets are a little shakier and things are already kind of overextended, like you sometimes have price just very, very, very violently sell off to the point where like you actually don't get the retests, and that's what I was pointing out here. Like you didn't get a clean market structure break to sell to sell, right? Because the market structure was here and we broke it, but it never came back. It was gone. It was completely gone. Now there are some other models, right, that show that like this is something I sometimes use when I'm trading like lower time frame charts. You have this kind of, again, look, you get the fair value gaps up, but then you have a fair value gap down. So this is kind of like this is basically a swing fail pattern on a higher time frame. So if I pull up like a weekly, where's my weekly? Yeah. So if I pull up the weekly chart, this is swing fail. The SFP, as they say, you can see candle wick above, failure to close. We've kind of got like the high, higher high, lower high, this kind of 3 candle pattern, and boom, we're gone. So some people who have like they take aggressive entries, right? They actually get in on this gap here without waiting for the structure break. And if you did that, you caught that move. But this is the type of entry that can get you like stopped out a lot. Like this very frequently isn't enough confirmation. Very frequently price just kind of yoinks back higher and you feel dumb. So context is really, really important. Context here is that on a really high time frame, we're actually already running a prior high, and then we have a high we're running here. A lot of people were looking at macro at the time, saying that looked dicey. So hindsight is 2020 on these things. I did not sell the top. I got out of ETH and probably like 3,300 or 3,400 or so. So not perfect, but we'll try to do better next time. Anyway, I hope that model is useful for people who haven't seen it before. Like I said, it's not magic. It doesn't work 100% of the time. It doesn't always look exactly like that. You're dealing with multiple time frames. You're dealing with context. But just that idea of using market structure around high time frame levels, breaks of structure combined with displacement, like really strong moves. It's a super powerful catalyst, and it works like on high time frames just as it works on low time frames, and it also works, going the other way as well. Like that is how I got in on like almost this entire Bitcoin move, right? Because we see the opposite of what happened at the top at the bottom, right? Like we actually kind of had two separate instances of the same thing happening. Like look how let me remind you again. Like so on the daily here, at the very top, you can see this little pattern we have. I think some people call this a BPR, a balanced price range, but it's basically made up of a displacement move up, a displacement move down, and then this entire gap here, like this gap that overlaps the two candles. This is something you see a lot, and it tends to be a pretty powerful zone that often holds, right? So there's the overlap of those two zones there. If I zoom out on the weekly chart, you can actually see this happening on the weekly as well. Like you have these displacement moves up, but then you get these displacement candles down as well. So I think this entire zone here is going to be interesting coming into, and is probably going to be like a fat area of resistance after we run this 48K level. But if you go to the bottom of the chart, you actually see this in reverse, right? Because look what we have here. We've got this gap here down. This is the FTX gap. And then we have another gap up, right? So this is the zone that overlaps these two. And what happens here, all right, so we got basically this formation here. And what happened in the spring, get a quick wick into that zone, and then boom, we're gone, right? So as soon as I saw this forming, right, like I was like, oh, this fits into my model, and I know I've drawn this like 100 times, but like, yeah, I just saw like a accumulation zone here, a rapid move out, and then a rapid move back into the range. And again, this is a weekly chart, right? So this is the type of thing that can like be like an actual sustainable bottom for years on end, because it's not happening on the 5 minute, it's happening on the weekly chart. So as soon as I saw this forming, like I wasn't sitting around waiting for price to retrace back into this area and then go, because like when Bitcoin starts moving, it just doesn't give you entries. I know that somebody in my friend tech chat was actually asking me to explain these gaps a little more, what a fair value gap is, and it's pretty basic, right? It's a 3 candle pattern, and the gap is formed between the low of one candle and the high of the other, right? So let's look at this set of 3 candles right here. You see that? So here's the low of this candle. You have the candle that creates the gap, and then you have the high of the next candle. The difference between that high and that low is the gap. And you will very frequently see price retrace back into that gap before trading away. I know some people who follow ICT refer to these, like a SIBI or a busy, a sell side imbalance, buy side inefficiency, a buy side imbalance, a sell side inefficiency. I don't think you have to get too in the weeds on it. Like, the basic idea is that price moved so rapidly that it was only sort of offered or bid in one particular direction. And price generally doesn't like that. Like, the market tends to like to return back to areas to sort of rectify those imbalances. But when the market is moving very, very, very quickly, like, you often don't see all of these gaps filled in. And this is especially true on Bitcoin, right? And it's especially true to be like aware of these gaps, because they're sometimes the only way you can enter into these trades, right? Like, because the standard way people will say, to tell you to trade these things is to sort of like identify the last down move, before like a big up move, right? Because this down move is an area of demand, right? And because it's an area of demand that broke market structure to the upside, it's a very strong area of demand, and it's an area that if price were to return to, would be likely to give you a big bounce, right? But what you see here when Bitcoin is moving is it doesn't go anywhere near this, right? In fact, all it typically does is retest the gap, often with one wick, and then it's gone, right? So you saw that a couple of times during this run. Like, obviously you saw that here in the spring. This is like kind of the Coinbase FUD. Quick wick down and we're gone. And then we leave another gap here. And then what happens, we trade a little bit into the gap, and then boom, another up candle, right? I suspect a similar thing is going to happen now, where if we get any sort of sustained move back into here, like, it's probably a bad thing. It's probably like you're a fuck thing, because if Bitcoin is truly going like straight to 48K, it's just not going to move in a way, now that it's already moving, where you can kind of get like a neat, clean, safe entry, right? It's going to typically do something like this, and then like wick, and then it's gone, right? And then maybe you get a reaction here, sort of, but then wick, and then it's gone. Like, you see this all the time. Once these sort of moves have played out, right? Like, once price kind of comes back to an area like this one here, the reaction from these zones is sometimes a little bit different, right? Like, this whole leg down has, I hope, already played out, already reached its like liquidity target, right? So we're not expecting price to bounce off this gap and then just go back to all-time lows. You might get a little reaction, but then ultimately we probably close through and go higher. I tweeted a while back a chart of the 6 month on Bitcoin, just in an effort to sort of zoom out. And one of the reasons I got kind of bullish was that on the 6 month we see a similar pattern forming, right? Because here's a gap on the 6 month, right, on the way up. Here's a gap on the 6 month on the way down, right? And then the overlap of this zone, right? This should be resistance, generally speaking. But what happened? We actually closed above the entire gap. and I tweeted that like this is pretty bullish signal on like a 6-month time horizon. And then we've talked a little bit about power of three, open, high, low, close when it comes to a candle, right? Like you've got your candlestick body, you've got your wick, and you've got your wick. When you're expecting a bullish candle, right? So if this is bullish and we're thinking the next 6 months is also going to be bullish, what you were expecting is the open to happen for price to trade down to form the wick and then to ultimately trade up. And like look at what has happened so far on this 6-month candle. After that, the previous 6-month candle, price opens, we wick down, and now we're going higher. Right? So you can sometimes zoom way out, simplify charts, look at like the really high time frame candles. Give yourself a 6-month bias. You can look at the 3-month chart with the 6-month bias. Give yourself a quarterly bias. Do that with a monthly bias, weekly bias, and you can kind of keep layering on all these higher time frame biases on to trade positions. And you can trade like weekly swings, and within those weekly swings, you could be trading daily swings or hourly swings within the daily context. Like there's really so much you can do there, and it's like super interesting. Because price is fractal. It behaves the same on like weekly time frames as it does on hourly time frames for the most part. These concepts you can just kind of use like over and over again. Pretty cool. Yeah, sorry, I got a little bogged down in the the education here, and I feel like I didn't feed you guys enough alpha, that sort of thing. So sorry for that. Let's go back to alts real quick, just so I don't rug you all on the title here of the stream. We got a little off the beaten path, but we were talking about why I'm kind of mostly focused on ETH and when I'm going to focus on rotating into alts and why and like why I view ETH as sort of like the leader when it comes to that alt rotation trade. For those of you who don't know, we've got these total 2 and total 3 metrics on TradingView. So total 2 is your crypto market cap, everything, Bitcoin, stables, ETH, you name it. It's like kind of an interesting metric, but for altcoins, I feel like what you typically want to be looking at is the total 2 chart, which is everything except Bitcoin, and then total 3, which is everything except Bitcoin and ETH. Now, if I zoom way out on the total chart, I sort of see, we're zoomed way out. We've got market structure that looks like this, right? And this is like the market structure when people are like, I'm just really bullish on crypto. I think crypto is going to 10 trillion, right? This is like very high time frame structure. And you can see on the very high time frame, there are no lower lows. We have higher high, higher low, higher high, higher low, right? This is all just one big gigantic bull trend. And we've basically retraced into the fair value gap from the late 2020, early 2021 move, right? Pretty close to the 50% of that. So kind of looks like we're basically ranging here, basically in an accumulation pattern. Nothing too different on the monthly. Your monthly, your last high of the monthly is actually like way up here, because yeah. So I'm obviously not going to wait for price to go all the way up here and be like, okay, crypto's gone up 180%. So now we've broken bull structure, so I'm going to get long, because this is just so far away from where we are. So I'm kind of looking to weekly charts to see if there are some early signs of us, and even on the weekly, like we haven't had any closes below this level. So I just see this as one gigantic non-Bitcoin accumulation range at the moment. if you buy alts here, you're sort of buying in the middle of a range. Like I can fib this range out. And yeah, I mean, not exactly in the middle, but you're in a range. So if your time horizon is long enough, right? You're like, oh, I don't care if price goes down here and I lose 30% and then like it goes up. I don't care. This is a perfectly fine zone to accumulate, right? It's perfectly fine. And we are seeing some really nice signs of life because here on the weekly chart, like we can see that these moves have been very, very strong. We got a gap, we got a gap. So 2 consecutive gaps. When I see 2 consecutive gaps like that, like I have a very strong reason to believe price wants higher. And if we kind of map out a structure here, you can actually see that this move up broke this high here, so you could consider this like an early indicator of a structure shift, right? And it makes sense to me that we're going to go and take these highs and then maybe target, you know, somewhere in this huge gap here. That's a pretty nice move, right? Like if we actually trade all the way up there, it's a 31% move. But this chart obviously includes Ethereum, and a huge chunk of what I'm analyzing here is actually just analyzing the Ethereum price. So total 3 is a bit of a better thing to look at, and you can see that when you look at total 3, that high that we took on total 2, that was actually mostly Ethereum, right? Like when you move Ethereum from the equation, like we're still kind of making, and like, yeah, maybe that goes up, but like this could also just kind of do something like this and continue ranging sideways and accumulating. So potentially promising for sure, but until I see like a pretty decisive break of this 413 billion level, I'm not going to get super excited. Although, if for some reason we do get a bit of like a scary sell-off, and 15%, not unheard of at all in the alt world. This is like actually a pretty interesting level because you have some demand zone here that's giving you a pretty strong move up. We did take this high. It's highly plausible to think that we might kind of stall out there, grab some more fuel, grab that high. So I like looking to get into shitcoins a lot at this level here if we are able to get it. So either that absolute level or at some ratio on the ETH chart or the Bitcoin chart. Those are the 2 kind of things that I'm looking at there. So not time to go all in just yet on a broad basis, but with that being said, you are seeing lots of signs of life when you look at specific altcoins or sectors of altcoins in general. Obviously, we've talked about Solana a bunch there. Solana has had a great time. Link here on the stream a few weeks ago, I think we mentioned that on this move, you're probably just going to get a sweep of these lows and then a move up without getting like a really clean retrace. And that's basically what happened here on the daily. You can see just like a sweep and then we're gone again. So Link continues to look super strong. I did buy a tiny bag around like 10.50 or something just so I had something. But yeah, this thing looks good, man. I mean, it looks like it wants this high for sure. $18, solid move from here. Very strong. Something else that's been absolutely smashing is a coin I've said that I kind of want to accumulate, but later in the cycle. But Blur, I think, is just absolutely smashing today. Blur, the NFT platform, the Coinbase competitor, it was up like 30% at one point today. That is a fat candle, ladies and gents. 46% in 2 days. No big deal. No big deal, guys. So yeah, this looks like I would say the macro bottom is in on Blur. Might be a little early to make that call. I mean, maybe this is the high here you want to see at 44 cents or so. But that's a pretty strong move. So congrats if you caught that. I'd be looking for some sort of retrace personally to get in. But like I said, I kind of have this idea that I want to rotate into NFT related stuff after ETH pumps, because I think the NFT stuff is especially dependent on a strong Ethereum price, and the Ethereum degens getting recapitalized. One other area of the market I want to point out that I think is really interesting is the AI coin area of the market is done very, very, very well. I think as far as AI coins go, like Render is probably your flagship AI coin at the moment. I have a decent Render bag. I feel like it's, other than like my ETH layer 2 bags, this is probably the largest altcoin bag I have at the moment. I got some. Oh God, I still having PTSD when I talked about it on the pod down here before it even ran. But I didn't buy any, so it doesn't count. But I did get some on the retrace. I think we were running into a huge supply zone here. You can see we kind of hit the 50% of this level, and then a sharp sell off. But the overall structure still looks good. Like on a higher time frame, I don't think we've broken structure. Even though on the daily, obviously, we had a nasty breakdown over the summer, but price seems to have just bottomed into this weekly order block here, and then boom. So I think this wants higher. I think this wants to at least run the June highs, but I don't know. I could see something like this really going just full max stupid, because it's going to fit in with a lot of other TradFi narratives, and I don't think that sometimes when we have these bubbles, right? Like we had a little AI bubble in the spring. It's not like the bubble just happens and then it's gone and you never hear about it again. Sometimes that's like the warning shot, and then you get the full AI bubble later. Next biggest AI coin, Fetch AI. I have no idea what this does, by the way. I just know that it has .ai in the name, and it's a fairly large market cap relative to some other AI plays. Fetch is having a time. Like, this thing is up bigly, basically doubled in the last couple of weeks. Again, you're running into resistance here, but I don't know, man. Like, if the bull's back, like we're gonna take 61 cents, and who knows how high these things can go. So worth having on your radar for sure. I remember trading this image generation AI coin when it came out. I actually made a nice little sum on this during the 6-day AI bubble in the spring. But could be back. We've had a pretty decent movement lately, yeah. So this thing, like since crypto came back, I mean, these have been some of the best movers. These AI coins, 300% off the October lows. Pretty good move. This thing has very little liquidity, by the way. I'm actually kind of curious how big the liquidity is. When I trade these things, guys, I am doing very, very tiny amounts of money. Like 99% of my portfolio is just in majors for the most part, because I can't deal with trading all these micro shit coins. Damn, this thing's 33 million FTV now. That hurts. That hurts. I thought I was really smart when I sold this thing in February at 2 cents. I guess it's still only up 50% from them. So whatever. So yeah, that's been pumping. What else do we have here in the AI? Oh, Optimus AI. Again, I want to stress, I have no idea what these coins do. I just know that some of you guys are degens and you get tired of me just analyzing the Bitcoin chart. So just giving the people the degeneracy that they want. But this is undeniably strong as well. Yeah, I mean, when you see just gigantic weekly candles like this, and I don't know, sure, this is all supply resistance up here, whatever you want to call it. Still 100% gain away, and I think this is like a tiny market cap too. $21 million. Yeah, so some of these things can really they can really run if we get stupid. Not necessarily recommending it, but putting it on your radar. Like, undeniably, these coins are running, and it's probably a sector, if you will, to look into. Last but not least, our buddy Bitcoin, not the real Bitcoin, but Harry Potter, Obama, Sonic 10, Inu. I don't know, man. Like, good case to be made that this is going to be like the Shiba of the next cycle. Kind of feels like you have to have a little bit of a bag of it just so you don't want to jump off a building if it goes to 20 billion market cap. So you can kind of think of it as an insurance fund on your own life in a sort of way. But yeah, I mean, big weekly candle. That's a good pump. It's a solid pump off the bottom, 214%. Yeah, looks like it wants all-time highs, and then if it goes to all-time highs, like, God help us, dude. What is the market cap of Harry Potter, Obama, Sonic 10, Inu? I feel so dumb saying that. There it is. 130 million market cap. I love crypto. So, yeah, I don't own any of this stupid thing yet. By the way, the only coin I own that I just showed you is Render. I actually used to own some Fetch, and I sold it at 20 cents like a moron a few months ago. So, rip to me on that. Yeah, I don't know. I guess I don't hate an entry near here. I sometimes use the moving averages for these like stupid coins where I can't really analyze any actual price action, and it's just kind of like a joke. Yeah, you start with your daily. So, yep, holding daily trend. That's nice. We got the tap of the gap there. Okay. And then 4 hour looks good. Bounce it off the 100, 4 hour trend. Yeah, I mean, I think it gets pretty interesting if we take that high. I'm gonna add an alert. But yeah, I wouldn't hate you for jumping on board now as like a momentum trade. Like, obviously this is supply up here, but we've already tapped into it once, and if like we're just gonna run that high if we go up. So Austin, would be interested to hear your thoughts on Rune. I actually haven't looked at Rune in a long time. So, see what Rune looks like. Okay. 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 Yep. Oh, damn, I should have been paying attention to this. Yeah, you had a pretty strong indication that you wanted to get long. Oh, that was a good entry. This is going to be some grade A hindsight trading, but there's your market structure there. I think this is the low, came from this high. So, yeah, damn. So you get a weekly close, and then you get a really nice test of the weekly trend here in early October, and then we just send. What does that look like on the daily? Oh, it's so easy on the daily too. Look at that. Just taps demand. You get the 200 EMA, the 100. Just taps that. Oh man, why don't you guys tell me this stuff before before it goes up? Oh man, that's a nice move. Damn. Is that like 100%? 130% even from that entry? Oh, shoot. Yeah, Rune looks solid. Let me see what that looks like on my my normal chart. Yeah, I mean, shit, man, this thing can run for a while. I mean, it's not really a high until $13. So, I could understand wanting to buy it. It does look pretty good. I haven't been following Rune for a while. I know there was some sort of hack or disaster a while back, but yeah, have not been paying attention to it. I tend to focus mostly on Ethereum and some Solana stuff, just because it's just like a huge world out there, and you just get so overwhelmed trying to chase every bag. But yeah, Rune looks pretty interesting for sure. Trying to think how you can get in this. How would I get in this? Yeah, I mean, this is sort of the supply responsible for the last leg down. We've obviously clearly flipped that. So you can see if you really zoom in on the 3-day, this little fractal here is basically the last down move before we take this high. If you zoom that into the daily, okay, now you get a daily order block, 12 hour, yeah. So that could be an interesting spot if you are to see some sort of run of all these lows into here. Yeah, I'd say like a little, like anything sub $3 is pretty cool if you are able to get that. Yeah, so I would be looking for I'd be looking for a retrace into the zone, maybe like a little run and then a structure break, something like that. Get in there. Otherwise, I don't know. I just don't like chasing these things like this, because then I have to spend my whole day glued to the charts, making sure I don't I don't get liquidated. I'd rather get in at an area that I think can hold. And this is clearly like a higher time frame zone at least. And like I said, this order block around $3 also lines up with this supply over here. So that's a pretty cool area for me. Otherwise, you're probably just waiting for like a larger, retrace down into this leg. But do you get that? I don't know. That's the pain with the it's the pain with the altcoin sometimes. I mean, that's a ways down. 44% down, not out of the question. But like I said before, like usually when these things run, they run really hard, and you don't want to see them making these huge retraces because it's a sign that the move might have already ended without you. Anyway, so I do sometimes like just hopping on board at these little areas closer to where price is, and I'm kind of okay doing that there because, like I said, I mean, on a like $13 is probably where you'd expect it to ultimately go. Shorter points along the way. Yeah, there's some supply here. 680 or so, but again, that's still a 2x from here. So, yeah, pretty cool. I like it. One more point on the alts, and then we'll call it a day here. I think. Kept telling myself I'm gonna do hour streams, and I just freaking go 2.5 hours. I gotta get better at this. Yeah, Bitcoin dominance. So obviously people are pretty excited right now. Alts are running because we have this little move down here, right? But if you zoom out, that is just it's nothing. So Bitcoin dominance to me still looks like it wants to run higher. So generally bearish alts versus Bitcoin. With that being said, I think there are sectors of alts that can do well. I think there are select alts that can do well, but I kind of like to swim with the larger tide. I think this zone up here is going to be an interesting spot for Bitcoin. Somewhere around 62% dominance. I don't think Bitcoin ever goes above these 2021 levels again. To be honest, and this seems like a logical place for us to, sort of test, maybe in confluence with an ETF and some halving hype, but then ultimately I think this just goes to new lows in the next cycle. To be honest, like I think over time this just continues to go lower and lower and lower, especially as crypto gets wider mainstream adoption, and we get more projects being kind of put into the world that actually do stuff and garner sustainable users. It's going to be very difficult for Bitcoin to maintain 60% market share of like a $20 trillion asset class or whatever we end up going to. But yeah, this is like a really strong signal for me. Like I would say my top two altcoin signals are the Bitcoin dominance and ETH. BTC, not just reversing, but running a while, and then starting to run out of steam. Actually curious. I haven't looked at stablecoin market caps in a while. Wonder what looks like these days. All right. Well, we stopped going down only. So that's nice. Yeah, that's pretty encouraging. So I think the other thing to recognize, if you're like looking at it, for those of you who don't know what I'm looking at here, this is the total market cap of the largest stable coins. The sort of idea being that it's a measure of liquidity flowing into or out of crypto. If you want your coins pumping, right, you want liquidity flowing in. You don't want the same liquidity kind of circulating between coins, because then you're just playing musical chairs with people, some of whom are a lot smarter than you and me. And it's just not generally a recipe for success. And yeah, we went through a pretty nasty downtrend, and crypto prices suffered as a result. But yeah, we stabilized. I mean, we are at the same level we were at a year ago, which is nice. And then we've definitely had a trend just noticeably kind of reverse, and looks like we might go back up. So that'd be a very, very welcome development. I actually think this metric is going to get worse and worse and worse, though, because I think we're starting to see the implementation of more real-world assets on chain. So if everybody starts holding tokenized T-bills, for example, that's basically cash. It's basically liquidity on chain, be collateral you could borrow against to buy Ethereum and such, but it's not going to show up in the Tether or the USDC market cap. So it's probably an adjustment I'm going to have to make to my own models anyway. Yeah. All right, cool. Well, I'm going to end it there. I'm going to wrap it. Apologize for getting a little sidetracked with the wonky education in the beginning, but I don't know, maybe that was useful to you guys, and you liked seeing that. Always open to feedback in the chat. I don't know if you guys just want to know what coin go up, or if you like learning a little bit about how to trade, even just kind of light concepts that can help you as a casual investor. So happy to share more of those. Happy to do whatever's best for you guys. So yeah, let me know in the comments. If you're not already subscribed and you just watched this entire video, I don't know what you're doing. You should probably subscribe if you're willing to watch a 2-hour video of me drawing on charts. Like the video, of course, helps people find me. If you want to talk to me directly, you can find me in my friend tech chat. We're dropping some alpha in there, and also I'm hanging out in the Alfalfa Pod Discord. Links at alfalfapod.com. Got a nice community of people there who are not just talking about crypto and money, but also, learning about life. Max, you want to know what button to push to get rich? You got to push the get rich button, man. I don't know how much easier to make it for you. But yeah, I'm gonna try to start getting some shorter videos out too. Maybe shorter one-off videos. I'm not sure if I'm gonna keep doing the live stream. I know that you guys like the live stream later in the day, but I like to play pickleball later in the day, and I'm already doing 2 other podcasts, and I need some time to trade too. So might turn this into a sometimes live thing, or just kind of like a show that I release at a regular time, maybe supplement it with some shorter videos. Put out a short video last week on Solana. It's been doing pretty well, so might do more of those because you guys seem to like them. Yeah, that's enough rambling for one day. Hope you guys enjoyed the content. Yeah, if you follow me on Twitter or on Discord, I'll let you know when the next stream is. But I think Monday is probably going to be a good day for me moving forward if we do keep doing this live. So yeah, stay tuned. I will let you know when I'm live again. Otherwise, I'll just kind of release some content ad hoc, and I will see you guys back here soon. Have a lovely week.